All right, so coming into 2026, the gold trade was in full bloom. It was beautiful. It was like something we'd never seen, the big move there. But of course, in the past couple of weeks, it's all been erased. The luster is gone, and I got to be honest with you, it's truly bewildering. You know, I once called my next guest the youngest gold bug I've ever met, and he's still a buyer. At least I think he is. Let's bring in Kobeissi Letter editor-in-chief Adam Kobeissi. All right, Adam, first you got to explain. What the pounding and first of all, the swiftness of the pounding and the degree of the pounding in gold is shocking. How did this happen?
Look, I mean, I think we've been on such an incredible run in gold that what happened when the war started was there was just mass flight to the sidelines, right? We've seen this before in geopolitical conflicts. Yes, uncertainty is and remains very elevated, but what happened when the war began was everyone said, you know what, I want to move back to cash, right? And that kind of took gold down to the high 4,000s, maybe towards 4,700. And then we saw earlier this week, later last week, we saw even more downside as yields started spiking, right? With the 10-year rising about 4.4%, rate cuts are being priced out. And now we're starting to find a bottom, right? And actually, if you really zoom out, you really see that the long-term picture for gold has only gotten stronger. Bonds as a safe haven trade are now weaker, right? With yields higher, with rate cuts being priced out, with deficit spending, with inflation, they're weaker. The denominator of gold, US dollar, is facing more inflation. And the global safe haven trade, which I've always, which I've consistently been buying, which is gold, is now really the only safe haven trade that's left, right? So I think in the short term, you see these sell-offs, but the long-term picture and those who are really able to differentiate between emotion and objectivity in the market shows that right now is a great buying opportunity. So, I do think we see gold back above 5,000.
Above 5,000, okay, because you mentioned in your note the Bollinger Bands. I put one in there. We're right at the bottom of it. We get back up. The first midpoint would be 49.93. And that's essentially what you're talking about, at the very least, getting back to the middle of that range. All right, so let's talk about the S&P 500 for a moment. You're bullish on it. You've got a target of 7,000, a stop loss at 6,400. What's the catalyst? I mean, I think it's pretty simple if we can get some ships through the strait, but is that what you're looking for?
Yeah, I mean, that's the short-term situation, right? What's going to happen over the next couple of weeks is going to be nonstop headlines, just like we've been seeing, right? We're almost at the 1-month mark of the war. But if you really zoom out, the driver of the market, which has been the AI trade, has only gotten stronger over the last 30 days to 3 months. Actually, it's gotten much stronger. We're actually accelerating, while the market is kind of discounting all of that because of the fact that there's a ton of uncertainty in the Middle East. But I think once that subsides, investors are going to quickly rotate back into these large cap technology stocks, which have actually become cheaper as they've gone up and now gone down, with earnings kind of growing so much faster than share prices are. And investors will start to look beyond the day-to-day headwinds and the day-to-day noise of the volatility we're seeing now and say, you know what, these names really are not as impacted by what we're seeing in the macro picture right now as the market may think they are. And we're going to start rotating back into them. So I've actually been using this recent correction as an opportunity to pick up some of the quality names, which are only getting stronger in my view.
Bernstein put out a target of 150,000 on Bitcoin. I know you like gold. Do you like Bitcoin here as well?
I think, Bitcoin is a longer term play. So I think right now we're going to continue to see this choppy price action that we've seen. Bitcoin's really been between 65 and 75,000. And the reason behind that, it seems like it really just ran out of catalysts. Like, we had nonstop bullish catalysts really for the first 11 months of President Trump's term, and the market kind of stalled out. This is normal, right? We've seen many of these cycles throughout Bitcoin's history. Bitcoin is still outperforming almost every asset class if you just zoom out a little bit more. So I think right now we're consolidating. It's really just kind of a technical, choppy period. But the long-term narrative is very bullish. It's kind of similar to gold. I mean, I know I always come on this show and say people are fighting about Bitcoin or gold. It should be Bitcoin and gold, right? They both kind of drive higher based on the same macroeconomic headwinds and backdrop that we're seeing now. So I do like Bitcoin. I think record highs, it's only a matter of time before record highs return. Not that I'm calling for record highs tomorrow, but I think if you're long-term oriented, then it is a great buy around current levels.
And we do know one thing, and to your point, that this was a former resistance point. It's become support. They build a foundation. When this bad boy takes off, it really takes off.
Yeah.
Hey, Adam, hope to see you again soon.
And we're nearing that point where everyone thinks Bitcoin's going to zero, right? And we've learned, historically speaking, that those are the points when everyone should start buying, right? So I think right now, if you start averaging in, it's a great entry point.
That's the ultimate buy signal. It always has been. Thanks a lot, man. Talk to you again soon.